How concerned are you about what's going to take place in high yield and these potential bankruptcies that we could see?
Yeah, I think it's important to note that before this weekend happened, when oil was at 50 and gas was at $2, a lot of the high-yield energy market was struggling at that price deck. So the yield was on the high-yield energy was over 10%. So now we have this weekend, we have a $15 price decline. So that just further exacerbates the problems. And, you know, because of hedges and liquidity and stuff, I don't think we'll see, it's not a 20 event, but in 2021, you could see significant amounts of bankruptcies. Half the bankruptcies in the high yield market last year were in energy, and that was at a much higher price deck. So, you know, whether oil goes up or down from here, even if it goes up $10, it's really just delaying the inevitable. It's more of a timing issue of when these companies ultimately file.
And you say that could be pushed out into 2021. I mean, you have the likelihood of Moody's downgrading debt. I'm wondering what the threshold is, what their sort of comfort level, if you will, is in the price of oil and how that relates to how they're viewing their downgrades.
Yeah, they generally apply a price deck, and they'll shift it over time, so there'll be some lag effect, especially if the investment-grade names generally get pretty good leeway in terms of, you know, whether they're going to cut them to high yield, but they've been cutting difficult that if you add any bit of leverage on, it really isn't that attractive an investment in my perspective. It's maybe a better equity investment because you have unlimited upside. But in bond land, you know, there's bonds that you lost 100% of your money on with a capped upside. So that risk-reward ratio just isn't terribly attractive for us. And so, you know, I try to keep that in mind rather than trying to target oil prices.
Is there something in energy debt that is attractive to you today?
So our largest domestic energy position in our flagship multi-sector fund is in the Cheniere complex, and they sell liquefied natural gas, and they sell it under long-term contracts with typically investment-grade counterparties. So in that investment, I'm really lending against the contract structure and the counterparties rather than the price of LNG to some extent, although obviously that's still important. So that would be one area where you're not really trying to bet on maybe oil prices so much, and can still make some yield.